Hello everyone, it's Wednesday, December 10. Today we'll analyze the charts for the euro and the British pound to assess potential market movements. Yesterday, the performance of the European currency mirrored that of the previous day. The euro experienced modest gains during the European session, buoyed by positive data on Germany's trade balance, which exceeded consensus estimates. However, risky assets later faced pressure following strong US labor market data, particularly the new ADP weekly employment change indicator, which saw an average increase of 4,800 jobs. Additionally, US job openings exceeded market forecasts, providing further support for the dollar. Though these economic data tempered demand for both the euro and the pound, these currencies remained within sideways trading ranges. The state of affairs is quite logical, as the market is in a wait-and-see mode ahead of today's Federal Reserve meeting. The regulator is widely anticipated to lower interest rates by 0.25% to 3.75%. Today, traders will closely watch the Fed's economic projections and comments from Fed Chair Jerome Powell during the press conference following the meeting. If Powell signals further policy easing to support the suffering labor market, the dollar is likely to weaken, allowing the euro and sterling to extend their bullish momentum. Conversely, the Fed may choose to adopt a cautious stance, indicating that any further decisions will be made at the next meeting. Given that the latest US jobs data will be released after this December meeting, policymakers are unlikely to make bold statements about the future trajectory of interest rates. In this scenario, the dollar is expected to hold steady, with traders shifting their attention to upcoming jobs data. What is more, today's macroeconomic calendar includes data on Italy's industrial production and a speech by ECB President Christine Lagarde. With a light calendar in the first half of the day, significant price fluctuations in the market are unlikely earlier today. Turning to technical analysis, the 1-hour EUR USD chart indicates that a false breakout at 16.19 would trigger a buy signal, driving the euro up to 16.49. If the price breaks through and consolidates above this level, the euro could rise to 16.78, potentially reaching 1.1703 or even 17.26, especially if the Fed adopts a dovish stance. In this range, it would be wise to consider short positions on a rebound, aiming for an intraday correction of 20-25 pips. Short entries at 16.49 and 16.78 should only be taken following a false breakout. On the flip side, if bears manage to push the price below 16.19 and the Fed maintains a more cautious policy approach, the euro could decline to 1.1591, where long positions could be considered on a false breakout. If the euro extends its weakness to 15.58, this would present an opportunity to go long on a rebound, targeting a move of 25-30 pips. Speaking of the British pound, the trading setup is similar. False breakouts at 32.87 and 32.63 would present buying opportunities. Going long on a rebound would be relevant at 32.37 in anticipation of a 35-40 pip move. For short entries, it would be prudent to consider 33.16 and 33.52 on a false breakout, or 33.86 and 34.16 on a rebound, aiming for an intraday correction of 25-30 pips. Given that the bullish trend remains intact, long positions are preferred, especially if bears remain subdued at 1.3316 and the price breaks through this level will ease. Consolidation above 33.16 would provide a good opportunity to add long positions. Best of luck to everyone.